ING slashes rates. Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Grab your stein of coffee because we're discussing, well, it's kind of opposite day, at least it feels like it, because for once a bank is cutting rates. Now is this a sign that we're going to see a pause in the cash rate, or maybe a cut? What do you reckon? Let's check out this article from Yahoo Finance. So ING slashes the fixed home loan rate ahead of the RBA meeting because there's some predictions that the RBA are going to pause their cash rate hike. And for those of you playing at home, you can see the cash rate shooting up here. You know, I had a while where I didn't have to update this chart. Now I pretty much have to every month. It's tough being a YouTuber, guys. It really is. You got to update charts and copy, paste things into forms and stuff. And oh boy. I guess this is the price I pay for doing no post-production and just live streaming as I record. So, you know, it gives the authentic dodginess to my recordings, eh? So let's check out this article. Now offers the lowest 4- and 5-year fixed rates on the market. Let us know in the chat if you're an ING customer. I've used them for savings, and you know, you got to jump through so many hoops to earn interest on their account. I've got my super in them now, and we'll see. I'm kind of getting bored with it, but I have to see. Any good for home loans? One thing I'd suggest is don't stick all your eggs in one basket. You know, spread your business out between multiple banks. Make them work for it. Have them compete with each other. So ING has slashed its fixed rate home loans as Aussies brace for another Reserve Bank RBA meeting on Tuesday. The bank has lowered its 1- and 2-year fixed rates by 20 basis points, or 0.2%, while its long-term rates of 3, 4, and 5 years have been cut by 25 basis points, or 0.25%, equivalent to the typical cash rate hike dealt by the RBA. So it looks like these ones here, the 1 and 2, they're trying to get people into jumping over to the bank. So there's still opportunities to shop around. I mean, what you want to do is you want to find a broker, you want to put them to work for you. You know, ring up your bank, try and get a deal. But the problem is, so many of you have probably got like bullshit all bugger all mortgages, you know, like 80 grand, 100 grand. Some people are saying, I rang up the bank, they won't give me a discount. Yeah, because you're worth nothing to them if you've got like 70 grand left on your mortgage. Just decimated. And then there's the viewers who've got a decent side mortgage, but then they've got a stack of cash in an offset account, so it equates to nothing. According to CanStar, ING now has the lowest 4- and 5-year fixed rates on the market at 5.34 and 5.44% respectively. Okay, so let's jump over here to this one here. So let's see, what are they saying? 5.44%. So let's say if you go off a 1.99% interest rate, which is what, this is the mortgage cliff. The reason I put the 1.99 is because, well, that's my interest rate I got. A lot of people got that one too. You know, some people got less, but, you know, all of those of us who are the mortgage cliff people, we're the ones to watch out. And the 596 here, that's ACT. Let's change that to the first home buyer average, because they're going to be the ones, which is 480, 479. They're going to be the ones that jumped in recently. They've got these mortgages, and they're going to be in trouble, because what if they got in at this low rate, and then all of a sudden, boom, they say, okay, we'll go to ING, we'll get a deal. We were watching HeiseSays the other day. Let's have a look. Let's check him out. So once they face the cliff, this is the delta change. 52% increase in repayments. So you've got to realize this. Okay, we all know this is the fantasy rate. Right now, we're at artificially low rates because the Reserve Bank manipulated the market, because they had no idea what was going to happen, and perhaps they might have overreacted, and now we're going to see the damage from all of that. Well, you know, that's kind of the Australian way, isn't it? Oh boy, hang on, I need a shot of coffee. But you're looking at a 50% increase, which is not as bad as some that we've seen in the past. So let's jump back over. Yeah. So that's 5 years. I wouldn't, you're not going to be going, well, I can't imagine most people will go from a fixed to a fixed. The only reason so many people went to an ultra-low fixed rate was because rates weren't going to go up until 2024, so you might as well fix. Most people and Australia tend to have the variable. My understanding is to pay off more, to do the Dave Ramsey and just go hard. Well, Dave Ramsey wants you to have a 30-year fixed mortgage. ING joins 10 other lenders that have cut fixed rates in the past 10 days, including Macquarie Bank. Cutting fixed rates and making them more appealing is a way for lenders to lock in new customers and shore up their portfolio, CanStar editor-at-large Effie Zayos said. These fixed-rate offerings are also timely for borrowers rolling off a fixed-rate period, who may be seeking the security of locking in their rate again, rather than worrying about how they will cope with potential rate rise increases. Okay, so people are afraid of rates going up even more. I guess if they're worried about return to the 90s, double digits, 7%, 8%, 9%, 10%, it makes sense to fix. Locking in can give borrowers peace of mind, as they have certainty of knowing what their repayments will be each month after their fixed rate. So you can see here, 1 year fixed, 5.64, down 20, 2 years, down 23, down 25, 25, 25. So there we go. This may be appealing considering the average variable rate was now 6.14%. Sales said, but borrowers should be careful about jumping in. It could mean a quick saving windfall, but take care because what might look like a great rate now may not be as good in 12 months' time, with some banks forecasting that the RBA may start to reduce the cash rate as soon as this year, she said. So the mortgage cliff looms. The RBA expects 880,000 fixed-term mortgages will come to an end this year, after many borrowers locked in ultra-low interest rates during COVID. Now, here's the thing. Is that all going to be those people who just bought and first home buyers, used all the government grants, used their super, and really pushed themselves too far? And then once they hit these variables, they're going to be forced to sell and the whole housing market will collapse and everyone will be, the fire and brimstone will fall from the sky. Or are a lot of them grumpy old bastards like me who've been sitting on a mortgage for a decade, made a big dent in it, or have a mortgage from a period that is less insane than the COVID mania, so jumping back onto variable isn't going to be as much of a sting. Now, I can't really find the breakup of that. We can see that the transactions for properties over the year of, 21, was about 600,000 changed hands. So, I mean, that's not this entire number. It could be a huge chunk of it, but what is it, about 40% of the mortgages are fixed? So let's say 40% of 600,000, we're talking less than 300,000 of them are of those mortgages would be the fixed ones that are going to come off. So I wonder if we need to worry about it. That's just the perspective I have at looking at this, because I've read so many of these articles when everyone's predicting property doom, property crashing, but I'm getting skeptical of it. And the mortgage cliff, I'm skeptical as well. It's like the interest rate only. No, interest only cliff. Remember that? What happened with that? Nothing. It didn't do a thing. Customers facing this mortgage cliff will be facing the force of 10 consecutive rate hikes, with the RBA set to meet again on Tuesday. If you're coming off a fixed rate period, it's worth shopping around and seeing if you can get a better deal than the revert rate you'll automatically go onto. Don't forget to factor in any fees and costs associated with refinancing, including any discharge application, valuation, documentation, legal and settlement fees. CanStar previously found refinancing costs were $807 on average. And here's some lowest home loan rates. What do you got here? I mean, variable, and this is your LVR. The loan to value ratio is what's going to capture some, or screw up some people. The people who bought in during the mania went right to the edge of their LVR. They won't be able to, some of them may not be able to refinance. Now, that's the danger of negative equity. It means you're trapped and maybe paying a little bit higher interest for a period. Anyway, let's have a talk about this. So there we have it, everyone. ING is cutting rates, slashing them, 25 basis points. I wonder if we will see the RBA cutting rates next month, or even just maintain them. What do you reckon? Let me know your guess or prediction in the comments down below. Thank you all for watching. Like, share, subscribe to the channel. Check out Heise BIM and Heise Does. And if you're a fan and enjoy the content I create here, you can support us on YouTube or Patreon. Use our affiliate links, buy our Pocket Squares, or call us if you need an architect. Take care, guys. Have a great day. And I will see you all in the next episode of HeiseSays. Bye for now.